How's it going, everyone? It's Sam. We have two really good things happening right now in the markets, two big pieces of news, and we have some other stuff coming up here soon. I want to talk about that. If you don't mind, hit subscribe, turn on that bell notification underneath the video. There's also a link down there to my Twitter. In case you're not following me there, I do publish or post some information when it comes out, so check that out. And if you want to join the Patreon to know what I'm buying and selling and to get daily updates on the market, you can check out that underneath the video as well. There are only so many spots and they are going to fill up quick during the next bull run, which it seems like we're getting closer and closer to. I also want to talk about a big exchange that is now getting sued by the SEC. So we'll talk about that in a little bit. Let's get started. The crypto market looks like it's down over the last 24 hours. It's up over the last hour or two because of some good news which just came out. PPI inflation falls to 0.1% in June, below expectations of 0.4%. Now, at first when I read this, I thought, oh, great, 0.1% since last month. That's not what this is reading. That's not what this says. 0.1% over the last year. That's the last 12 months. We went from 11.5 all the way down to 0.1. PPI is a leading indicator. It measures the change in price of goods sold by manufacturers. It's a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. So when this comes down, it probably means CPI is going to come down, probably means PCE is going to come down, which means that the Fed is less likely to continue to raise rates and to hold them higher for longer. Core PPI inflation, which people think is stickier. They think core is stickier. Investors think core is stickier, and that's not going to fall down as quickly. It fell down to 2.4% in June, below expectations of 2.6%. So core continues to fall down too, from 9.6 all the way down to 2.4. Now, I'll be honest, I have not checked this in the last minute or two, but I heard that there also was a revision down from the prior months. So overall, this continues to come in lower and lower. This is the first time PPI inflation has come in below 1% since January 2021. This is a massive change. I mean, we have seen negative PPI before. Back in 2020, it's not normal to see that. You can see the last time before that was 2016, then 2020, and now it looks like we might have negative again, which is crazy. It's good for consumers, obviously, but you don't want it to go too far where people are starting to think, okay, if we have negative inflation, well, then I better not buy that John Deere tractor. I better not buy that new car. Better just wait a little bit because it might actually lower in price. I want to be careful of that, which is why I think the Fed probably is likely to change their tune, or to definitely be less likely to keep rates higher for longer. Maybe even not even raise them as much at the next meeting. We'll have to see, though, on that. That's not my base case. I think they'll still probably raise 25 basis points, but I don't really think there's a point in that right now. We just know that they are always behind. They're not always doing the best thing for the economy, which is probably just to hold off now. I mean, we're seeing inflation fall off a cliff, but they're so worried about making sure that inflation goes away that they over-tighten. Now, the next thing that could cause the markets to do really well is this. This is the DXY, the Dollar Strength Index, and we're seeing it fall. I mean, take a look at the last week. We have it going from 102 down to about 100. Now, this is so interesting because the last couple times that we have had it go under 100 have been actually really bullish for the crypto market. I mean, take a look back here. 2017 was the last time that we saw it go above 100 and then back below. And then the time after that was June of 2020. This has been a very bullish time for the crypto market. This has been a very bullish time for the crypto market. Now, this is Bitcoin's price, and these blue lines are those circles I just drew. So back in 2017, after we moved down under 100 on the DXY, we had a big run in Bitcoin, obviously. That was the bull run of 2017, 2018, and we moved up about 1,200%. And then after we moved down under 100 on the DXY in 2020, we went to a peak of about 615%. Now, I'm not saying this will necessarily happen again just because it's happened in the past. That is not always the case. But I do think it's a good sign for risk assets when the DXY starts falling, and 100 on the DXY is a pretty key psychological point. So I do think it would be really bullish, especially if we come down well below 100. I think it would be really bullish for crypto. At the same time, this is lining up with inflation falling away. At the same time, this is lining up with a potential spot ETF. At the same time, this is happening with the next Bitcoin halving. I think this is a really good sign for the crypto markets. Now, I do want to cover some breaking news. SEC is suing Celsius. This just came out. Really funny, though, because after everything that's happened over the last couple of years, they go and decide to sue Celsius, 6 months, 12 months, 18 months? I don't even know at this point. A long time after they went bankrupt. I think it's been about a year now, or a year since they paused withdrawals. I think it's just too little too late. The SEC isn't protecting you. They're just waiting for things to blow up, and then they're suing, or they're suing before things blow up, which I guess is the other side of the coin, where hopefully they're actually protecting us, but it doesn't seem like it. It seems like they just have a vendetta against all of crypto, and now they're just throwing this on the pile because, yeah, they can probably get some money out of it, which if they sue Celsius and they take money away from them, and Celsius is going to repay some of their debts, they're basically taking it away from the people that are owed that money. So that's kind of crazy to me. I don't get it. But let me know your thoughts on that underneath the video. Again, I just think it's too little too late. Hopefully, the SEC flips their tune on crypto. I don't mind, I guess, them suing Celsius, companies like this, or suing the people that were behind these Ponzi schemes. But I don't know. It's just, like I said, I think it's a little bit like taking it away from the people that are actually owed the money. Now, this is some breaking news. CEO, or ex-Celsius CEO, Alex Machinsky, has been arrested Thursday morning. This just came across on Bloomberg. A lot of people are talking about it. I think overall, it's probably a good thing. It stops other people from doing this, or at least reduces the likelihood. And we need to hold people accountable, especially here in crypto. Then some good news to end the video. Google Play changes policy towards blockchain-based apps, opening doors to tokenization of digital assets and NFTs. Google has updated its mobile software marketplace policy to allow application developers to integrate digital assets like NFTs into their games through the Play App Store, the company's group product manager Joseph Mills announced on Wednesday. As part of the policy update, Mills stated the apps must be transparent with users about digital tokenized assets, and developers can't promote or glamorize any potential earnings from playing or trading activities. So basically, you can have NFTs, but you can't push that they're a great money-making venture or anything like that, which honestly, I don't mind. I think the majority of people that use NFTs aren't going to be trying to make tons of money. They're just going to realize that that is some way that they can kind of recoup some of their time. If they do want to leave the game at some point, they can sell and then basically take that to a different game, or even trade one game's assets, NFTs, for another game's assets that they're interested in playing more of, which I think is a good thing. So overall, I think this is great because obviously Google getting on the NFT bandwagon helps more people sell NFTs, obviously, which causes the network fees and causes more transactions to happen on some of these different chains. It also means that they're probably going to try to take part of the pie. They realize that NFTs could be big and they want a cut of the revenue. Now, there are a couple big things happening this week. First of all, we had the CPI, the PPI. Tomorrow we have bank earnings, though. This should be interesting to see how all the major banks are doing, see if they're putting away a lot of money for credit defaults, or for loan defaults, seeing what they think about the consumer, that kind of thing. But then next week, we have tech earnings starting with Tesla on the 19th. And this kicks off earnings seasons for the rest of the market, really, outside of the big banks. I'm going to be paying attention to that. I'm going to be covering that. If you like that kind of stuff, hit subscribe for the channel, and I will continue to keep you updated. Thank you so much for watching. I appreciate it, and I will see you in the next video. Bye.